Hey, what's up everyone? Silver Slayer, welcome back for today's video. So today we're going to be diving deep into the gold to silver ratio, not only educating you guys on what the gold to silver ratio is, why it's important, how you can manipulate the markets, or even more importantly your stack to earn free gold or silver, but also looking at potential profits, potential market fluctuations on ways that could benefit yourself to earn free gold or silver. And we're going to really be looking at the predictions that can come from looking at these charts. As you guys know, the gold to silver ratio is above 80 to 1 right now, which means it takes 80 ounces of silver to equal 1 ounce of gold. It comes out of the ground roughly 9 to 1. And past historical measures of the gold to silver ratio have been 12 to 1. Then it got to around 30 to 1, 60 to 1, 70 to 1, and now it's above 80, all-time highs over the last year. And we're just going to look at this because this article does look at it from a unique angle. I was browsing around like I usually do, just reading articles about different things. Gold to silver ratio is definitely a pretty important topic to be reading about right now, especially if you're trying to really play the best move for your stack, whether it's pushing just straight silver for the metal content, just the bulk, metal value, the intrinsic value of silver. Not talking about premium, just buying silver as silver. And I made a couple videos about that over the past couple weeks because that is kind of what I'm looking at right now. Stacking eagles, maybe some junk silver, constitutional silver I like to call it, stuff like that. But I'm just going to go into this article. So anyways, so we can go in. This was recorded, or this article was posted December 19th, 2018, so pretty recently. And he talks about silver is a particular kind of precious metal. Unlike gold, nearly 60% of silver demand comes from industry, and this is definitely true. I made a video talking about the industrial uses for silver. There's so many uses for silver. Gold is more for jewelry and coins and stuff like that. I mean, there's some in cell phones and technology, but most gold is used for jewelry or coins, so it gets remelted, it gets re-scrapped. Silver, on the other hand, is used for so many different things. A lot of it gets lost, not to be scrapped or be recovered, so we're losing a lot more silver than gold. So he talks about silver has great physical properties while being much cheaper per ounce than gold, often referred to as the poor man's gold. Silver has outstanding characteristics that make it valuable and even indispensable to industry and beyond. We talk about this a lot. We stack silver. I made a video talking about why silver, not gold, and a lot of people say, ask why not gold? Gold is supposed to be the almighty, the royal. Well, I see a lot more potential in silver than gold, especially right now with the gold to silver ratio over 80 to 1. Silver's definitely the undervalued metal. It's the underdog, and I see a lot more potential in the future investment, especially for my own investments. I think silver is a much more appropriate type of investment, a better purchase, more profit, more potential. Anyways, he goes on to say this is why he remains bullish in his silver price prediction for 2019. Silver is crucial to electronics, to the solar industry, and new applications are being discovered on an almost daily basis. I've been covering this a lot about the new uses, especially the new advancement in the technological world. Everything is advancing technological, in technology. And definitely the really important thing to remember is silver is the most highly conductive metal for electricity and thermal conductivity. So in the technological world, if silver is the cheapest and definitely the best performing metal, then the supply's there or the demand's there. But if the supply's not there, low supply, high demand, you know what that does? It shoots the price up. And we also see this happening a lot with other types of investments as well, housing markets, real estate, whatever it is, low supply, high demand shoots the price up. That's stacking, that's any investment 101. And he says, and all of this is happening as a mine supply has been falling, likely having peaked back in 2015. So he's talking about miners now because they're not seeing as much profit in it. While the jewelry and industrial sectors have been more predictable, it's the demand for silver from the investment sector in the forms of bars and coins that's the wild card, which I was just explaining. I think 2019 could be a stellar year for silver prices as confluence of catalysts come together. This could ignite a strong rally as silver price remains very cheap on a both nominal and relative basis. Okay, so he talks about, so this is, I didn't want to really talk about just silver price predictions for 2019. I already made a video about that. I wanted to really go into the gold to silver ratio. So here he goes into talking about that. With climbing inflation, a potential surprise on the higher side could spark a flurry of buying in precious metals, and silver's extreme weakness relative to gold price suggests a reversion to the mean is metal future. Talking about the gold to silver ratio is so out of whack right now, there should be a correction coming up, and that correction would not only be either pushing gold cheaper, but pushing silver more profitable higher. Let's start by looking at likely drivers for silver prices in 2019, and I'll follow on with my forecast for the new year. These catalysts will drive silver prices higher in 2019. The gold to silver ratio is a great tool for comparing silver prices relative to gold prices over the long term. We simply divide the gold price by silver price, which tells us how many ounces of silver are needed to buy 1 ounce of gold. So I'll break this down real simple, real quick. Let's say gold's $1,000 an ounce and silver's $10 an ounce. That means it takes 100 ounces of silver to buy 1 ounce of gold. So if gold pushes to $1,200 an ounce and silver is still $10 an ounce, that means you can trade that 1 ounce gold coin for 120 ounces of silver. So you just made a free 20 ounces of silver because you pick the right times to buy and sell. Let's say you take that 120 ounces of silver, hold on to it, and then gold goes back down to $1,000 or $1,000 an ounce. So then you can trade the 100 ounces of silver for that 1 ounce of gold, keep the extra 20 ounces of silver. So now you have 1 ounce of gold and 20 ounces of silver, and you simply just made all that by manipulating the markets, buying and selling at the right times. So there's people that basically earn free gold or silver just by looking at the gold to silver ratio. Hopefully I broke that down simple enough. It's a little more complicated than that, but anyways, that's just what they're talking about. This ratio gets really interesting when it reaches extreme levels, and by all accounts, that's the case right now. Look at this chart. The following chart illustrates the gold to silver ratio going back 2000, near when the current precious metals bull market began. So this is the year 2000, and you see it's around 75 to 1, shot all the way down to 45 to 1. And then you see around 2011, and then you see down here, obviously 2011, this is when it really shot low. Obviously you guys know about that, in 2011. But now you see, so there's this pattern going, 75, 75, 75. Right now, this is where we're at, over above 80. This is a strong indicator that there's going to be a correction soon. And if this correction is going to follow suit, then that means silver is going to push closer to the ratio of gold, which means it's going to have to fluctuate back up to gold, making it either gold shoots down or silver goes up. Either or, you can use the gold to silver ratio to manipulate this, or you can also invest in silver seeing this pattern, knowing that there is a correction about to happen. Now, obviously, not all charts can be followed suit, but this is just looking at historical data, looking at patterns. With cryptocurrency, I do similar things. It says in the last 3 times, 2003, 2008, and 2016, that the gold to silver ratio approached 80 and quickly reversed. This is what I was just talking about. Following the 2003 ratio decline, silver prices soared 61% over the next 9 months. Follow indicators: 2008 ratio reversion boosted silver by a whopping 128% in 11 months, and 2016 ratio correction helped silver rally 28% as little as 4 months. So they're saying as soon as it hits around approaches 80 to 1, there's a huge correction that always comes. It first was 61% the first time, 128% the second time, and then 28%. So a correction does happen. We're looking at 28, around 30 to 70% chance of rallying or profit, 70% profit margin. So this is just something to keep in mind, looking at potential. I'm not saying this is a fact. I'm not saying it's going to happen. Investors do not predict the future. We're not fortune tellers. So we have to look at patterns and potential, especially when we're talking about intrinsic value investments that have potential. This makes sense. It makes sense to me. I look at the industrial uses, I look at the supply, I look at the demand, I look at the facts, I look at the history, and I look at everything combined. I put my own educated opinion or my own educated twist in an assumption. And I'm not saying I'm not a financial expert. I'm just sharing my opinion on this channel. I highly recommend you guys to also, in the description, you guys don't have to agree with me. As long as it's not bullying, harassing, or spreading hate speech, I will keep it on the channel. We can have disagreements or arguments. That's what this channel is for, is to learn, educate, all feed each other's minds and spread different points that we never thought about, so we can look at everything from all angles. Now he goes on to just saying that, now look at the red circle in the chart. That's where the ratio stands now at 85. That means silver is even cheaper relative to gold than at any time since 2003. It's at its highest level in 20 years. I expect we'll see a big reversion in the gold to silver ratio, likely down to around 65. And that's just one catalyst for silver prices in 2019. Now, I can keep going on. He goes on and on and on. I'm going to post this article in the description, but in the description of this video, you can check this out. He does keep going on about different angles. It's a very unique article. It's new, so it's up to date with everything, because all investments do go around the news that goes around it as well, because there is not talking about speculation like cryptocurrency, but everything has speculation when there's people putting their own money into it, affecting the markets on an actual chart where there is value, intrinsic value, or even not even just saying there's an intrinsic value form, but just in the market itself where there is supply and demand. That makes sense. But he just makes some very good points. I'm not going to go on and on about it. You guys can read for yourselves. I'm just curious of what you guys thought about this. I wanted to also make this video to educate people what the gold to silver ratio is and why it's important and how you can use it to your advantage to multiply your stack. So anyways, guys, I hope you guys enjoyed this video. If you did, make sure to give it a thumbs up. This was Silver Slayer. Thanks for tuning in. I'll see you guys soon for another video. Peace.